All right, guys, welcome back to another podcast by Mining Store. This is the fourth one that we've released for our weekly market update. Got a bit of a structure that we're following now. We've got Tony, who's going to be running through economic updates globally, the stock market, and relating that back to the cryptocurrency market. We've got our head of research and analytics at Mining Store, Mitch, who's going to be running through a bit of a general update of what's been going on, the key features that have come across throughout the weekend. And then we're going to be having a general discussion across the board of what's going on with the charts and what's going on with the market. So, Tony, do you want to start it off for us?
Yeah, sure. So, been a interesting week last week. We've seen a bit of a softening US dollar, which has been good for all risk assets. We've had a little bit of an uptick higher on equities and cryptocurrencies as well over the weekend. So, the dollar really rejected a major trendline resistance that I put up last week on the charts. We've seen some selling pressure coming into the market, and this week I guess all eyes are really going to be on the Federal Reserve interest rate decision on Thursday morning. The market is expecting a 0.75% interest rate hike. There are some stories out there about a 1% hike, a larger than expected. So I wouldn't be surprised if this week we did see a bit of a rally, a short-term rally in the dollar. However, there are some technical patterns now indicating a possible reversal in the dollar is coming, which should filter through down into other risk assets. So, why would the US dollar slow down? There's fears that we are in a recession. I spoke about the GDP already. There's the yield curve inversion as well. So, if we are in a recession, the Fed may obviously need to pivot towards the end of this year. If they do come out and say in their press conference afterwards that they may take a less aggressive interest rate hike stance towards the end of this year or over the coming months, I think that might give the market something to cheer about in the short term. So yeah, still well too early to kind of call a low in the market, but there are some positive signs in the short term.
It's pretty interesting as well, considering that this rate hike also has to factor in August as well.
Yeah,
because
exactly.
There is no market update there as well.
Yeah, exactly. So the market's using the September meeting as the potential pivot point in over the next couple of months. So yes, we may get a large rate hike this month, but it could also be that kind of one and done scenario, or a large rate hike, get it out of the way, and then maybe a less aggressive stance moving forward. So yeah, the market is expecting a large rate hike this month, and then September is really being used as the pivot sort of meeting. But yeah, that's up in the air, and the market's going to start pricing in what it thinks is going to happen, over the coming months soon. So yeah, interesting one really. Kind of break or make scenario for the dollar index. Either it's going to dump, the Fed steps in to protect the markets, or the Fed is going to let interest rates continue to rise, and that'll cause absolute carnage in the market going forward. So very, very concerning.
And stock markets, we feel they're mostly priced in around about a 1% rate increase. We shouldn't see a massive dump if 1% does come out.
Yeah, I think that's potentially priced in already. So the market is very much forward looking, forward thinking. That's why we've had that large sell off over the past couple of months leading into these meetings. So where the market is right now, that's potentially priced in that full kind of 0.75, 1% rate hike. So if we get anything in line with that, and some maybe dovish talk from the Fed about possibly easing off on the aggressiveness, then that should provide a bit of stimulus for the market.
Definitely in the short term at least.
Yeah, but that's going to filter through to cryptos as well. So risk assets, cryptos are considered a risk asset. So yeah, really it's a dollar safety play. If the dollar rallies, risk assets are going to go down. If the dollar dumps, then risk assets are going to perform well. So just keep your eyes on the DXY this week, and sort of Thursday, Friday will be the sort of telling point, I guess.
Yeah, I guess that's probably the next talking point, isn't it? Is at the moment it's a guessing game between everyone in all financial markets about the current state of the market bottom. Particularly for cryptocurrency, you have a number of historical indicators and trends that more often than not indicate the bottom and the market cycles and how they turn. We've sent through a lot of these the past few weeks. I think last week we discussed and visualized the pi cycle bottom, which we have in a couple of other ones, and even if you go on things like Glassnode and whatnot, you can find numerous bottom indicators that are indicating that there's a genuine bottom formation that could be underway. But as we've kind of said over the months as this unfolds, it's just very hard to kind of take these for face value, and you have to take them with a grain of salt because we are in the worst macroeconomic environment, BTC's faced over a decade. So, the bottom could be in it. It could not. I think the main selling point is usually more often than not, there's always a retest of a bottom that's already occurred. So we tested 17,500, I think it was. I think 19,000 is also a huge retesting point. So you can probably expect, with the way the market's moving now, that we could get a retest of those lows before any potential upside if we do bottom out. And who knows, there's, with the way, Fed hikes are coming, there could be further capitulation, there could not be, this could be the bottom. So I think it's kind of a patience game, isn't it? And I think this is why you can't be picking and guessing the bottoms and whatnot. This is why you have dollar cost averaging strategies in place, so you don't have to guess. You just slowly accumulating, slowly picking them up because...
Or mining.
Yeah, or mining, exactly, earning passive income because, at the end of the day, everything's a risk to reward ratio, downside versus the upside. If you're currently dollar cost averaging into Bitcoin or Ethereum at this stage, yes, there's the worry that you could be buying now and you could have bought at lower prices in a month or two, but genuinely the upside to what you think you'll get in the next run, there's no harm in buying at these levels or, officially calling the market a bottom for yourself now and scooping up, a lot of good investments at current prices. So,
picking tops in a market, picking bottoms in a market is a mug's game. It's very, very difficult to do, and it's very, very unlikely that you will pick the perfect entry point into the market. So, just take more of a relaxed approach and don't just jump straight into the market. Like you said, Mish, dollar cost average into the market is the best way to go.
I was having a conversation with a bunch of guys on the weekend that haven't invested into cryptocurrency at all, and they're asking the exact question, when should I buy in, should I wait and whatnot. I'm like, if you haven't got any exposure to cryptocurrency right now, you're in a great position to pick up, what is pretty much the bottom anyway. Like, why try and wait for it to get down to 15, get down to 10 grand to get your first entry in when you can pick it up now? You're looking at this as more a long-term investment, next 2, 3, 4 years. You'll be laughing when you look back. If you don't, then you kind of wait until it goes up and it gets to 20, 25, 30, and then you go, I think I've missed the rally, and then you never pick up anything. So, getting something in now, if you're a beginner or just haven't got into the crypto market at all, can't go too wrong.
Yeah, if it gets to 50k and then you've gotten in at 20, 21, 23, it's not going to matter. You know what I mean?
Yeah. With these targets, on the upside before the bear market started, people were looking to sell off at 100k. It didn't make it to 100k. They missed their exit point. On the downside as well, most people are expecting it to reach 15k, 13k, which would be a full 85% correction. And if it doesn't get down there, they're going to miss out on the bottom as well. So these targets that people put out there, very rarely do they actually hit them. Exactly. So people miss the opportunity to exit or to enter the market as well.
And it's a good point because everyone's narratives and biases shift. And, when BTC was 65k, 95% of people were calling for 100k and it completely reversed. And if you stay up to date with the market, at the moment, 95% of people are calling for lower prices. Whilst, that might never happen. It's the same as 100k never happened at 65k. Exactly. So whilst all these people were waiting for 100k at 65k, the exact same thing's happening right now. There's all these people out of the market in stables or whatnot that refuse to enter because everyone's of the bias and of the narrative that, we're seeing 13k, we're seeing 9k. And this is why so many people miss out because they don't have proper strategies in place to, at least be entering the market at this stage in the case that we don't see lower.
On the note of proper strategy as well, just a really simple trading tip is a lot of people say, when it gets to X price, I'll do Y. But if it doesn't get to X price, what's your alternative strategy? So you need to make sure you have in place. If you're saying, I'm waiting till it gets to 15, okay, but if it doesn't get to 15, when are you going to enter? If it starts to rally to 22, 23, you're going to call it and say, okay, that's no longer going to happen. I'll enter in now. Make sure you have that alternative strategy in place.
It's the whole reason why you have to have opposing views and, different indicators and whatnot, because you need to be prepared to see both sides. You need to be prepared to have your ideas invalidated. And like Will mentioned, okay, well, if we chart one way and we expect, say, Ethereum to go to this price, okay, well, on the flip side, if this indication is invalidated pretty quickly, then what do I have in place in the case that, it goes up quickly, heaps in price? And for those members that are with us, you would have seen this recently with our Ethereum strategy, selling off some of our holdings that we scooped at a lower price, but we've already got holdings in preparation for if Ethereum does keep climbing, well, great. We've now got a win-win situation where we can ride DCA buys that we've had at 1,300, 1,500, and if it falls lower, great. We've now got another 3.5 units that we can invest in at a lower price whilst actually having more units of Ethereum held. So,
a quick note there as well, like for people who are listening to this and it's going over your head a little bit and you're not understanding the full picture, that's probably because within a 5, 10, 15, 20 minute podcast, you can't teach people how to trade, but do looking into the Trading Academy. All of our posts are educational. If we're making a decision, if we're changing our strategy, we're telling you why. You're not expected to know how to trade straight away, through following our posts. Over where it might be 3, 6, 12, 18 months, whatever it might be, you're going to start picking up on how we're trading and implementing that into your strategy as well.
Yeah.
I think that's a really clear point as well, because to be honest, one of the main things that I hear, not necessarily just with people that I talk to, but even friends and things, is that their whole strategy is based around picking it up at the bottom.
Mm-hmm.
But to me, that's not a strategy, because as you've said, you're missing out on so much upside of actually DCAing in.
Mm-hmm.
Picking the bottom, nobody can do it.
No.
No technical indicator is going to tell you the bottom is 100% in.
Yeah.
So how do you, dictate that?
Yeah.
It's just not a strategy.
Exactly right.
And and as I mentioned before, it's upside versus downside, right? Well, you're thinking, very simple thinking right now is BTC, just for example's sake, is at 20k. Okay, well, if you're scared that it's going to go to 10k, all right, well, that's a 50% loss. But if you're thinking, okay, well, if I think it can drop 50%, but it can go to 100,000 in 2 years, well, then you've got a 50% downside represented by 500% upside, 400% upside. So that's exactly how you should be viewing it in the long term. When you're thinking of entering at these levels, just look at the downside versus the upside, and you'll come to a pretty quick conclusion on what you should do. We'll quickly move on. There's just a few things to touch on fundamentally. Voya Digital have recently come into contact with FTX, and there's a restructuring plan going on there. So there may be something for those Voya Digital people to get away to get their money back, but that'll be an ongoing thing we'll probably see play out in the next couple of weeks, and whether they're bought out and what happens with 3RS Capital and the over-leveraging there.
Have you, just on that as well, have you seen any more exchanges or, companies that are at risk of liquidation as well?
Yeah, so I'll quickly touch on that. We've actually had a cryptocurrency exchange that's pretty prevalent in Australia in the last week or so, have rumours about them going under, and that's ZipMex. I did an article on this on Mining Store, so you guys can go on the news section and read that. But yeah, just like other exchanges, they said beyond our means, we're having to halt withdrawals and whatnot. So there's been plenty of rumours flying around there because they over leveraged and loaned out to other people like many other exchanges did, and now they're running into troubles.
Get your cryptos in cold storage.
Yeah,
guys,
so
sounds like China Bank, but
so there's that. Most of you already probably know and have read, and it's all over mainstream media, but Elon selling off, or Tesla I should say, selling off their holdings at the end of Q2. People overreacted to this news. This Bitcoin was sold long ago.
It would actually have affected BTC's price a lot more.
Probably would have if it was 12
not really,
months.
because of
the
the actual physical
macro
selling of it did. The physical selling of it did, but it just happened 2 to 3 months ago and people didn't notice, and it happened in the huge slide off from 28. He sold at an average price of 29,000, so he would have been selling in that consolidation period of 28 to 31,000, and it really slid off, and that's probably where his billion was sold in.
Correct. I think the news of it, 12, 18 months ago, remember that phase where Elon was just controlling the market, like if he's saying he's buying Dodge is flying, Bitcoin, it's flying.
I think it was pretty obvious as well, because, if he had come out...
They sold a quarter of it, didn't they, originally back...
they've got a quarter left, so I think they've sold 75%. But they'll
wait for him to buy back in.
But that was when it was back up.
Well, Tron has said they're going to pick up the 32,000 Bitcoin now. Does that mean we're going to have a positive reaction?
Well, in any case, it was pretty obvious that Tesla was in a net cash position where they had to, and it was pretty much an end of financial year decision accounting play, which is pretty obvious. It had nothing to do with them worried about the market as well. I'm sure, they probably were prepared the market would dump a lot more, so they were happy to cash in at the time around their cost price. But Elon did come out afterwards and say that, they're open to increasing their Bitcoin holdings in the future, and it was no detriment to Bitcoin itself.
Speaking about mega whale holders, I think there was like a transfer of 136 million BTC onto an exchange, and then it got dispersed against like 10 other wallets or something.
Yeah, I think these exchange ones are very interesting.
Like on Coinbase, they received 136 million BTC.
Yeah,
Well,
I think
BTC. BTC.
Yeah, I think it's those kind of transfers and stuff between wallets is a bit inconspicuous, because it could just simply be someone's It could be Coinbase just moving their BTC holdings from one wallet to another.
Could be one person spreading the risk over 5 wallets. Still like a lot of movement going around.
It's a big position.
So just two last.
I forgot to tell you boys about that move that I made.
Just two last things to quickly touch on fundamentally. Last week, the Bitcoin Mining Council gave out their report, and the latest Q2 report really detailed how much more energy efficient Bitcoin mining's become. You probably saw our article on Mining Store about this as well, so if you want more information on that, you can read it there. But
just on that, like, Bitcoin has this bad rep that it's such energy hungry industry, but it's actually one of the greenest industries out there in the market. So it's kind of like a false perception.
And the selling point, the hilarious thing, and the timing of Tesla selling off their Bitcoin holdings was, Elon infamously said a year ago that until 50% of the global Bitcoin mining network becomes green energy and is more mining efficient, then he wouldn't get involved to accept Bitcoin at Tesla, and it's at 59% now. So I think it's Elon's turn to scoop up some BTC at the bottom and start accepting it again.
I know he listens to this podcast, so come on.
Come on, Elon. We know you're listening.
There was a big play behind all that, right? Like, people were like speculating that he was basically wanting to position himself, because they're getting into the mining, wanting to position themselves as, we're the one who solved this, like bringing it over to Texas and all the rest of it. So I don't know. It's a hard statistic to gather. I think before that, people who are in the mining industry were saying, it's already a lot greener than what people are saying. So at least all measures that kind of recording this are saying it's greener and greener.
It kind of has to write it off against their tax too, can't they? Or, it makes sense, and then just buy the bottom again.
Mining has to be green. Like, it's not economical to continue in a grid-based format. Like,
especially the way the globe's going, everyone's investing into it long term now.
And energy prices are going to continue to soar. Like, the greener you are, the more money you can make. So
the guys, because the hash rates come down, the guys that aren't running with renewable energies are probably offline at the moment anyway, because it's so expensive to mine. So that's why the hash rate's probably coming down, and you're seeing those miners that are running on fossil fuels.
And like in Texas as well, like a lot of those guys have been down for 2-3 days or whatever it was during that heat wave, because they're on 90%.
Yeah, that's what they're gonna find out. Like with like that heat wave, is a lot of these mega miners, and it's going to be interesting to see in the next couple of months, like how they win, because I think there's a lot of them that will have to switch off because of the heat.
Well, I saw an article. I don't know how true it was, but about they were positioning legislation to try and curve how much Bitcoin mining is going on through Texas and whatnot, and putting stress on the grid. So it'd be interesting to see if some of those big farms have to pivot because they're not as green as what they should be.
Alright. Well, whilst we're kind of still on mining, Theo, did you want to?
Easy. So there's three things that I've managed to find in the mining industry that's had some significant impact. I think the first thing to speak about is the hash rate. So I think over the last 4 or 5 months, we've seen it come down about 30 exahash. Roughly, which is maybe 12 to 15% total from their all-time highs, which for miners, that's a good thing, especially retail home miners or people in the space that we service, because that just means that you're going to get more rewards. So part of what's happening is people like Celsius, people are familiar with them becoming insolvent, and part of that, I haven't confirmed all sources, but people are saying that they have auctioned off 70,000 miners, ASIC miners, because they had about 700 million in the mining industry. So they actually sold 70,000 at a really cheap cost. So right now it's influencing a massive cheap miners market, and even with some of my clients, even some of them are just purchasing miners for the pure fact that even if their energy is expensive, they're purchasing hardware cheap to whenever they decide to turn these machines on. Obviously it's a good time to be considering machinery regardless of where you're doing it, whether it's with us hosted, that people come to us for the cheaper power, but if also you're paying a little bit more expensive, you're buying cheaper equipment to mine even later on when you see that the price comes back up.
It's one of those rare situations in the mining market where, like when you're trading Bitcoin, you're looking to buy it low and sell the Bitcoin at a high price.
Yeah.
When you're buying miners, usually you're more looking at the passive income. But right now, with such a reduction in hardware price, you can also be looking at it as, well, the value of these miners is going to go up when Bitcoin's price comes up as well. And it can be substantial as well.
Yeah, and the other thing that they were saying with the 70,000 miners, whoever bought them, obviously Celsius had the infrastructure to house those things, but now it may be split across the purchase of all those miners across separate people that may not have the infrastructure or the rack space for them. Because I think the other thing is facilities and rack space is becoming quite low and very apparent to actually try to fill them. I'm not sure if you actually know that, but that's what I heard. And then also one of the really, a lot of big major miners, a few of them are a little bit up shit creek for the same reasons of overexposing themselves, using their ASICs as collateral and using crypto to get more loans. And those people that did incorrect financing are starting to feel the pinch now. We could see more of these flash sales and these types of things happening in the market. And also with Marathon, probably one of the biggest in the mining space, they have 35,000 ASICs operational right now. Their plan was to actually have 135,000 by the end of the year. People say that they're not going to be able to do that by the end of this year. So that's also going to play influence again to what I've just said.
What's caused the pause in that?
Well, just the BTC profitability and all that sort of stuff. So, they're just not going to...
So it's not rack space or anything, it's just literally profitability. Yeah, right.
But I think they're one of the ones that did the financing correctly, so they're not...
They're not liquid.
They've actually did use actual good financing, not as in crypto or the ASICs.
It's an interesting situation because for... institutional level miners, they can't really afford to be leaving all their hardware on during these BTC price lows because, as you said, they're over leveraged, they're meeting huge interest repayments, and these power bills are stacking up, right? But really, what that does is it pushes down the network hash rate, which actually increases the amount of Bitcoin that the average person is receiving per miner per year. So like an XP miner right now is, in a year mining 32% of a Bitcoin. If that network hash rate keeps coming down, that might be 36, 38, 40% of a Bitcoin. So for the smaller miner, and that still can be a miner that has, $500,000 equipment, in the big world, that's still a smaller mining investment. It's a really beneficial situation. No one that's mining Bitcoin at that level now is selling their Bitcoin daily. Most people are probably maybe selling a little bit to cover some power bills, but holding on to the majority of that Bitcoin.
So that's why I was inadvertent, not to say that those people up shit creek, the large miners, if they do fall over, it's good for us.
Good for us. Very, very good for us. You're getting 8% more or 40% rather than 30% of a Bitcoin, holding that, and then in 4 years' time selling that at a much higher price. So,
And also on the expectation of network hash rate, I think a lot of the big miners and people from the industry were predicting maybe 300 exahash by year's end, but obviously with the current macroeconomic environment, they're saying more or less more mid-20s, 200s, so 250 as a maximum, which seems about right, considering where we are and the amount of people that may not.
What exactly are we at now?
195, 197.
So another 50x.
Okay.
Just with the stories you've been bringing up there, Theo, it kind of begs the question as to whether enough pain has really been caused in the market. There's some companies on the edge.
On the edge, literally.
Has there really been enough pain in the market for a bottom to be in? So that kind of, maybe we need another low in the market to wipe out this last remaining
guys. A big cash ribbons indicator that we've had a big watch on. So
I think Celsius, just the last point, is one of their things that I've read on Twitter, one of their biggest things is they didn't anticipate the Terra stuff.
Yeah.
You know what I mean? Like, so that's why they're really...
On the pain side, network hash rate is a really good indicator to show has there been enough pain, because if you remember when the market first dumped from 40 down to 30 down to 20, that network hash rate was still
high.
Around when it was 30k was still well high, and everyone's going, why isn't the network hash rate dropping? That's kind of shows like there's more to come, like hasn't been priced in yet. Bang, as soon as the network hash rate starts dropping down, okay, now we've actually felt that pain. Could there be a bit more? Of course, we've already discussed that, but keep an eye on network hash rate as a trader.
And then just lastly from me, I think if anyone's considering mining, I think it's probably, if not the best time to be considering at least hardware. Like I say, we've got people that mine from home that are just purely purchasing machines because they are so cheap. But even on the other side, again, we've got our 2 product offerings being new in the US with the latest hydros. Unfortunately, we can't ship them to Australia. I had a ton of people reaching out, but we got a very unique deal, which if anyone's interested, just reach out. And then finally still have the EU place where we've been for quite some time at 11.5 cents per kilowatt hour.
And just to touch on that, it's an interesting point, like Theo says, about mining hardware costs, and now it's just going back to what we were talking about before. It's like pretty similar psychology in waiting for the bottom in the market, and then there's probably a lot of you, or maybe not a lot of you, but a few people sitting there, going like, oh well, I think the market's going to dump a little more. Like I'll wait till they're at their absolute cheapest to get myself like a few miners. Like, if you can recognise now that they're way cheaper than what they will be, in the future, downside versus upside again, like. You might as well slowly start buying a couple of machines now, or looking to get your first, and then you can maybe add a couple when it's even a bit cheaper or not. But
well, that's similar to the DCA strategy in Bitcoin. You do it with your miners to bring your price of your miners.
That's what I'm saying.
So I mean, it's the classic thing. Like, you don't want to be caught sitting on your hands. If you can buy a hydro miner now for 15,000 Aussie, and it's producing $8 profit per day around abouts in revenue. Why wait for the Bitcoin's price to get to 30, 40,000? That mine is going to be worth 20, 25,000. That's $10,000 that you're going to pay extra. Think about how long it takes to mine that $10,000.
Exactly.
So make the decision now. Whilst yes, the profitability is a bit lower, but get that hardware cost down as low as possible and set yourself up for the next kind of 3-4 years.
And the other thing is as well, if there's any new people that listen to this that have a lower budget, we do have some secondhand miners from clients that are upgrading to the hydros. So they've got older equipment that we're able to sell at a very low cost as well.
Perfect entry level type miner. If you're not 100% sure,
exactly. If you just want to
get one of those, start yourself off. It's still, in my opinion, a good investment.
100%.
And it's a much lower price. Which previously the cheapest miner we sold was 15,000 during the bull market.
Yeah. Exactly. But we've all been here before, Will. Even not just during the period when China banned Bitcoin mining. Bitcoin dumped hard. The hash rate dumped by 50-60%. But even before that, when we was mining through a bear market, 4 years or so ago, the people that were mining through that period, it was tough at the time. But the ones that came out the other side held onto their holdings into the bull market. They've done extremely well. So,
and a lot of them selling those miners, for a higher price than they bought them for, but they've kept all that holdings, that they've mined off it as well. So,
that's what I mean. A miner's like what, under a month's paycheck. You know what I mean? When was the last time a miner was that cheap?
Literally.
Did you want to quickly?
So on some good news with energy costs, obviously, we're pretty fortunate, but there's some new kids on the block in Paraguay. So there's going to be a deal in 2023. Brazil's sort of hydroelectronic deal with Paraguay's ending. So they're going to have really, I think it's around 44% of their on-grid power, which is hydroelectric based, around 5 cents per kilowatt.
How much power is it for that?
I think it was around 10 megawatts, something like that. Like, it's massive. So it's around 44% of their country's total use. So it's pretty good considering they're the second lowest country in the world for energy consumption per head. So they've got a brand new facility that's going up hopefully in 2023. It'll give a little bit more exposure to some other people looking to get into the market. Hopefully we might get a facility there. Who knows?
1 megawatt and how many ASICs?
It's about 300, so I'd say it'd be a bit more than 10,
probably a
but,
bit more than 10,
nevertheless, it's still a large amount,
But it's their plan to try and hopefully bring more and more people in. So I think their first
5 cents is a no-brainer.
Yeah, exactly. That's what I mean. So
Australia should be doing this as well. They should be looking at the mining market. We have the right conditions other than heat, but we've got plenty of solar power. We should be looking as an export. Yeah,
that's
correct.
the biggest issue. Is the infrastructure everything around it.
Nevertheless, it's great to see countries are taking advantage of it and seeing it.
Well, their thing is to try and obviously bring more people in to, take the excess of power that they're going to have. And hopefully, I think from the report, it was that their Prime Minister is quite bullish on crypto in a sense of trying to bring it in as adoption. So, fingers crossed, it means that area is going to be, brought into the fold a bit more as well.
Just on all of these emerging markets, the strength of the US dollar really puts pressure on these emerging markets, so they need to look at other ways to kind of protect their economy. Yeah. When the dollar strengthens, they can't service their debt as well because the exchange rate is so low, is so high. So it really impacts their economy negatively. So that's why you're finding so many of these emerging markets now look towards adopting Bitcoin going forward.
Yeah, exactly right.
Yeah.
I thought that was another cool little funny one as well in regards to obviously Taiwan's financial advisory telling credit card companies to not allow crypto purchases. And I saw on Twitter, I sort of read the article and didn't really put two and two together. And it was sort of the consensus was around that people were using sort of fake accounts in a sense to create credit cards and then go through and purchase, crypto and then obviously never pay back the credit cards. So pretty cool little scheme in that sense. But I think it's coming to an end.
You also got to consider Taiwan coming under the rule of China as well.
Yeah, exactly. When I think of Taiwan,
so I think it's more to do with the China play. They're trying to get half the people in Taiwan.
To technicals?
We'll move on to technical. There is some other general fundamental points there, but members will have them dot points in the update, and there's just little dot points, but we won't expand on. Moving on to some more technical stuff first. We'll be looking at Bitcoin first, just some general short-term price action. On a lower time frame here, sort of 4-hour time frame, we're seeing that we're printing some high highs and some high lows. We can see this here. The arrow and path I've drawn is very rough. We know you can't
perfectly.
You can't predict the actual movement of price action, but it's very rough, so it wouldn't follow this. But this is seeming like a pattern that's kind of seemingly continuing. The time of printing this chart, it was actually 22,600. So right now we're probably more likely at about this level here right now, just 21,700, 21,800. What are we? 21,800. So since printing this morning, we're about here, just above like a really key level of support. So, and what I want to show you guys is actually using the same indicator but on a different time frame. It's really important to look at them on short and high and low time frames. So using that kind of same pattern, we can go to a 12-hour up from 4-hour, and you can kind of see the longer term trend. So, despite that there might be some pullback that's evidently occurring right now before potentially a reversal to a higher high, we can still see on a lower time frame that we're actually making lower highs and lower lows. You can see the first initial low here, first initial high, then a lower low, lower high, lower low, lower high, lower low, and then are we currently making another lower high? It seems so. And then that same reversal that I'm kind of showing is we could print that lower high on the lower time frame at 2,800 and still form out that lower low. So it shows, bullish price action in the short term can still mean in the longer downtrend that there's still bearish price action. So they can actually both validate one another.
As you said, just so important to look at those multiple time frames and look at the bigger picture versus the shorter picture. Because
both of them can be validated, both can be invalidated. And then the next thing I want to say is, you guys are probably annoyed from hearing this over the last 2 weeks, but I've been talking heaps about the 200 weighted moving average and how, we've had that as support for the last decade or so. I can't remember exactly. I think it was the last time it dipped below it was maybe 2014, 2015. And whilst we had closed on high time frames, that we print, daily candles, 4 candles. We had printed a few candles above it. It's really important that you go to the most important ones, which are the longer term time frames. And on the weekly candle, we actually, for most of the week, were above the weighted moving average, and literally just before the weekly close, it got heavily pushed under. We saw BTC pretty much go from 23k, down to what it is now, which is 21.7k. So we've actually closed that weekly candle, as you can see, and started just to form a new one just under it. So clearly the bulls tried to rally very hard to close above this, which would then flip it to weekly support. But for now, it's still weekly resistance, which is quite bearish in the short to long term, really, because unless we kind of show a clean momentum break above this, macroeconomics hasn't really changed. It kind of points to the fact that there wasn't a lot of spot buying behind these pushes. It seems a bit of a fake out, as per usual. Theme of the week.
Yeah,
seems to any rally that we have in any week over a weekend or before a weekend is usually retraced pretty quickly, 3 to 4 days later.
Are we still seeing the volume at a pretty low level?
Yeah, the volume's always at a low level. I mean, really all we have to do is, if you want, pretty simple terms on these fake outs, is go to every time that BTC did break out of something like this and, look at the buying volume, and then once it retraces or rejects, look at the selling volume, and you'll always see a downtrend in volume or, of heavy reversal and selling pressure, which still kind of shows what narrative's being driven at the moment, that most people are pretty bearish and taking profits when they can and whatnot.
It feels like it's going to be a bit of a marry-up between once this, interest rate easing starts to come in, we're probably going to, at the same time, break through that 200 MA. Yeah. And that's going to be a position where, people are going to be all eyes on, all right, I better start getting, a bit heavier positions in. We're looking at a more bullish scenario.
Yeah, so I think just next is, you guys see this bear flag pretty much since it started forming when we got to this consolidation period. It's still forming. I showed you guys late last week with this fake out, and then it began to retest that 200 MA, and we're kind of starting to consolidate in there again. I'll show you on that week time frame with the 200 MA. You pretty much see a clean closing below it, and it's battling it in that bear flag still. So, that's still likely to play out. Like we said, you can couple a few things together here. The fact we're below the 200 MA, but the fact we're in a bear flag, maybe that really volatile move comes from the next Fed rate hike or whatnot. But it does seem like, things are pointing to a move downwards for now, but we always know stranger things can happen. So that's just why I want to show you one last thing that actually happened in Q1 of this year. Had very similar price action. I actually, discovered looking at this morning. You can see these very similar price actions, with leading diagonals acting as support, with a heavy upper level of upper resistance and a mid level of support. If you see back in March, March, April, May, here, we consolidated in the bear flag, in the ascending triangle almost. We broke out, but it was actually a fake out, and we came back down to the mid-level of support where we tested for a bit before breaking that diagonal of support and, heavy downside. If you go to price action now, you see us in that same kind of bear flag I just showed you, and then this ascending line of kind of support. And, we've consolidated it. We broke out just like up here. We've come back down. We're now testing that mid-level of support, and I think if you see this 22,000 level of support, which is currently broken, if we do close below that, and then we definitely close below that leading diagonal, just like up here, then I'm pretty sure you can expect very similar price action that happened here to happen here. So that'll remain to be a watch. But and then Will is just going to touch on Bitcoin dominance. Here you go, Will.
Yep. So pretty much, it's always good to look over the price cycles of Bitcoin. So if people aren't aware, Bitcoin's price cycles pretty much go in 4-year periods, and that's in line with the Bitcoin halvening. So basically, we'll get to a chart just here. Just go a little bit lower on that one, Mitch. just go a little bit lower, just go down to the chart. So basically what I've done here is I'm looking at back in 2017-18 when the bear market started to form. So for those of you who remember, I think we reached about 22,000 and then aggressively broke all the way down, flying down similar to what we're doing now, and reached a low of around $3,500. What we're looking at on the chart here is actually Bitcoin dominance. So we're not looking at Bitcoin's price here. We're just looking at its dominance compared to the rest of the market. And the lowest that we basically got to down there was around is it 42% or 30?
It's just above 30%. Yeah, I'd say about 35%.
Just above 35%. So what I've done, that blue line that you're seeing there is just a copy paste of like into the red. To see how Bitcoin's dominance performed after this crash. And you can see it's not the exact same. Obviously, I'll explain why we're not going to see it go all the way back up to 70%, but you can see that the pattern is quite similar. So what I'm basically getting at here is we probably should expect Bitcoin's dominance to come up a little bit more in the coming weeks, months, maybe 3 to 6 months. As I say, the reason why we won't get it all the way up to 70% is because now there's a lot more kind of legitimate projects in the market. We've got Polkadot, we've got Atom, stable coins everywhere. These are probably going to hold a fair chunk. They're not going to...
And just quickly on that, I think a fair point would be Ethereum and the merge and whatnot. That could be a big, turning point in Bitcoin's dominance, and whether, Ethereum starts to pick up a lot more of the dominance and whatnot as well. So...
Exactly right. So I don't think that we're going to see Bitcoin fly all the way back to 70% dominance, but I do think there's a little bit more of the alt market to shed off, and Bitcoin probably to come up. So personally, what I'm looking at here, I think Bitcoin is obviously probably one of the safer buys, but based on previous price cycles and how it's performed in the bear market, we can probably expect it to maybe outperform most altcoins. And Ethereum will probably do quite well as well. So just an interesting one to look at. You can also look at how much longer it'll be. That vertical line that I've drawn there is kind of where the market started to rally again. So Bitcoin breaking out of that 3,000, going to 4,000 to 9,000, then going on a big run. That'll be around February next year. And that kind of lines up with what people are saying, on a macroeconomic level, when we can probably see the DXY come down, interest rates slowing. So around that February period, from now to February next year, probably Bitcoin's going to rally and the market's going to kick up again.
And it falls in line with that point we did mention last week is, a lot of people do expect that, even if you do see a minor rally now or towards the end of the year, that doesn't indicate the turn in the cycle. For instance, in that point, we could see BTC rally really nicely, in January, February next year before we actually hit, another roadblock in the cycle, and before we start to even truly bottom out there before the next halving. So that's always just something to keep in mind. But we'll quickly move on to Ethereum to finish today's podcast. There's not too much new to report on Ethereum. It's facing some pretty wild price action, as most of you know, over the last couple of weeks. We've just got a simple chart here showing, its kind of rise to where it is now. It's got a really key resistance point at 1,700, which it almost reached this morning. I think it got to about 1,660.
Yeah, I think it was
1,660, 1,670. So it was fast approaching that, but was sold off pretty quickly once BTC's resistance of 23k was hit pretty hard as well. So we've still got that golden ratio line sitting there really nicely, support as it bouncing off. It's still trading above that line. And then, this is just another kind of similar chart where we're showing where the golden pocket forms at that key level of resistance. So we did expect to see kind of a push towards there, then a reversal. That actually happened a bit earlier than we anticipated. But in saying that, we're kind of around here-ish right now. We could still see a push up towards before rejection. But the feeling with Ethereum is, it's almost done 70% in the last couple of weeks, hasn't it?
Yeah, massive run.
So it feels like, in a bear market, it's got to be have a retest of some form of lows at one stage, and whether that's that bottom 1,100 level of support, or it's this Fibonacci level here, you can expect probably a retest of some form of lows at some point.
I'd say the 1,000 level is like a bullish invalidation level. Breaks that low is going to make a new low in the market. So any buyers probably want to get out of the market around.
Yeah, and that's why we've still got those further DCAs in as well. So and I thought we'd quickly touch on an interesting point Tony found this morning that was a touching point on the rallying behind Ethereum. You know, a lot of people are led to believe that, you know, it still could be, but the recent surge in price is to do with the merge upcoming in September. You know, this looks at FTX's involvement with the wrapped ETH that was STF, and you know, here it explains that, you know, because they've made an OTC deal to buy over 400,000 ETH, you know, that means, you know, there's 1 billion of a liquid ETH moving around. So, you know, this could be a good indication of, you know, stuff that's going on behind the scenes that could be, you know, synthetically pushing ETH's price higher than it should be. You know, you guys can read this if you want here. We'll include it in the update. But yeah, just something to keep in mind. You know, there's always some odd actors behind the scenes. You know, Sam from FGX seems to always be the one. But yeah, it's just something to keep in mind. We'll include this in the post for you guys to read. But yeah, that's it for today's podcast. Hope you've enjoyed the information we've relayed, and we'll be back next Monday to keep you guys updated.
Thanks for listening,
Thank
guys.
you.
Cheers, guys.